Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you from Money 2020 in Las Vegas, Nevada. And joining me for this segment, we have Sikes, Chief Operating Officer of Public.com. We're going to talk about the technology that we're using to leverage the public markets in a modern way. Stephen, it's great to see you again, this time in person, live, and much better than doing it remotely when we could be in Vegas.
You're not kidding, exactly.
And look, 2021 is definitely very different looking than 2022 has played out to be, but you've always kind of had a unique way and the focus that you take to approach long-term investing when accessing the public markets. What are you thinking about when it comes to right now and looking ahead to 2023?
Yeah, so I think there are two things we're seeing from our customer base that really drive everything that we do, right? First of all, we start with a long-term investor, customer base that's looking at sort of broadening their asset class diversification. When equity markets are as volatile and frankly like on a downswing as they are, folks are looking for other places to park assets, or at least seeing the nudge towards diversification that they haven't seen previously. So we've been working on bringing new asset classes to the platform. We brought an entire alts business, which includes both sort of investing in things like fine art and collectibles, and also sort of cash flowing assets like music royalties and so on. And so we're bringing those onto the platform, and also working our way towards maybe offering more fixed income type products. So that sort of asset class diversification is the first thing that we're seeing a lot of demand for. And then the second thing that we're really thinking about is actually how to give our members better tools to access the markets in volatile environments like this. So more automation, better sort of portfolio management tools. And again, I think those will be the two sort of touchstones of what we build over the next 6, 12, 18 months.
With your investor base, what's top of mind for people as they're starting to put meaningful dollars to work in the market? It's very different than you and I had discussed in 2021 about the meme craze when you're starting to think about, I would say, more intelligent investing, more research is required when you think about alternative ways to put your money to work. So what's top of mind for your user base?
Yeah, totally. I think what we've seen is, what I would say is like a really positive trend, right? We had a lot of new investors enter the market attracted by things like meme stocks and community-oriented investments and cryptocurrencies. And obviously those have had a tough track record, but we've seen two things continue. One, our members have continued to invest more through the downswing, right? We've seen accelerating net flows, people continuing to buy the dips, right? And dollar cost average into the equities positions that they care about. The second thing is, this is more of a recent phenomenon, really since kind of September and that latest rate hike. We've seen a lot of flows into fixed income ETFs, right? And I think that's not typically thought of as a retail product, but we've seen a lot of sort of searching for yield, and even on like the short end of the curve, treasuries and the like we've seen a lot of demand there. And I think that's one of the things that we take very seriously. And if we're looking at a more volatile interest rate environment and potentially high yield interest rate environment, those are really attractive products for retail in a way they haven't been for the last 15 or 20 years.
You've taken an interesting approach when it comes to fintech with more of a contrarian view, if you will, looking for more scrutiny around payment for order flow and market structure issues. How do you think this plays out as we look into 2023?
Yeah, so I think the first thing, we approached this problem as a business, and we were building from a very, very early stage. We said, hey, if we're going to try and attract a new long-term investor as customers, right? They have great options already in the market, but what do those existing options share? A deep trust with their customers, right? I think we looked at some of the most trusted brands are actually brokerages in some ways, especially among the discount brokerage. And we said, hey, how are we going to bring our brand and earn the trust of our customers? And I think obviously rejecting payment for order flow was one of those choices. And so I think what the other thing that says to me is, and part of the driver of our growth over that period of time, is that we really do have a problem in financial services more broadly about trust. And I think having a brand that's defined as being, it's really defined our business practices as standing for what's sort of retail financial services industry.
Right, I mean, look at the name, Public.com, right? Totally. And when investors are getting smarter too, and I think it's interesting that they are paying attention to payment for order flow. I think they do care about fees and not just being, just not accepting what's being put at them because we're providing the data, we're providing the platforms. Look at what we had as retail investors 10, 20 years ago compared to what they have now, but they're smarter than that, and they're demanding a certain level of trust and service.
Totally, and I hear the same refrain over and over from, let's say a lot of the incumbents, which is the public markets have never been better for retail investors. And you know what? That's true, but that can be true, and we can also make them better and continue to improve upon what is a great foundation for retail investors. Right. I think that's exactly what we stand for.
That's an awesome point. All right, Stephen, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.